This is a Stock Trading Reality Podcast, episode 109.
Yeah, it's really for day trading. It's, you can make all the plans you want the night before, but then if you get like a 2% gap down, and that basically throws everything out the window. So
this is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, Aladdin or Lion King. It's a tough call. Play trader.
And I'm definitely going to need our esteemed co-host Chez's opinion here because I'm torn. It's no, without question, a tough call. So, and context here for you new listeners, Chez never knows what these fun facts are. That just gives me a way to learn about him. And then, I don't know, I guess I just like to see how quick on his feet he can be. But he's quick on his feet. So I have no doubt in my mind that he's going to give me some valuable advice here. But Chez, the thing that I'm struggling with and what I think is indeed a tough call, Aladdin or Lion King?
Oh, that is a tough one.
You've seen both, right? Because you're an American.
I'm an American. I was a child at one time in my life, even though I don't have much hair left on my head now. But at one time, I did have hair and was a child. So we're huge. All of our families have been kind of big animal lovers. So granted, I know Lion King, they're like talking animals, so I get that. But they're so good. This is a tough one. This is a really tough one.
I would go with Lion King, but what's throwing me off is Robin Williams' performance in Aladdin totally shifts it back over. It's like, oh, but he was so like that movie's like is funny, like especially watching it as an adult. As a kid, you never picked up on the comedy that they're doing because obviously they're designed for adults. But it's like that's what it's a tough call, man.
Yeah, I got to stick with my gut feeling and go with Lion King, but I totally noticed that as well because we have a younger niece, and I never realized that how much comedy they splice in there for adults so that when they're watching it, they're not bored out of their minds. But rewatching some of these movies with my niece, I'm like, that was pretty funny. I caught that, but obviously it goes right over their head. But yeah, I'm going to stick with my gut and go with Lion King, but you do make a compelling argument for Aladdin.
Yeah, and I'm not going to commit either way because it's still a tough call, but if you haven't seen either of those movies,
what's wrong with you?
Yeah, what's wrong with? I mean, were you never? I don't even care if you're an adult. Like, you got to go watch those movies. It's like American tradition. So, but as far as American tradition, we're gonna go north of the border today. We're gonna go to Canada and interview H00ch, who has. I give the background at the beginning of the interview, so I don't want to touch on it much. But I'll just say at this junction of the episode, he's been around for quite a while, and I'll leave it at that. So he's been on before, and it's just a return visit here, and we're just going to shoot the breeze. We talk about quite a different gamut of things, including futures. So if you're interested in potentially futures, then yeah, there's going to be some futures talk. But we really just revisit with him, see where he's at, and just kind of pick back up with his journey, because obviously journeys are always changing. So let's get started with H00ch, our Canadian friend. H00ch, welcome back.
thank you.
We were just, this was about the most non-formal thing ever. Everybody hopped on. I don't even think anybody exchanged pleasantries. It was just, we don't know what we're talking about, but it's H00ch. So you're a veteran. How many times have you even been on the podcast? Is this your third or fourth time?
I think my
fourth
time.
Oh, could it even be up to the possible fifth?
Because we've had group podcasts with them. Yeah, you're pretty much on par to replace me soon if you keep keeping this up.
Replace both of us. We'll just call this the H00ch show. So I am going to be keeping track of HTU references. So I guess there's one that I just gave myself, but I know there will probably be lots of underhand, marketing going on, subliminal messaging. So we'll see. But I'm keeping track, and for every time you advertise, I'm not. That's a discount of the mind shares that I owe you. So just fair warning there.
Well, you're doing a fine job of advertising it yourself, so.
I was going to say, H00ch, good job of getting him to do it without even.
I was going to say,
anything.
I realized that number one is myself, so which he totally, mind tricked me into advertising it all on my own. So, but for you newer listeners, yeah, H00ch, Dave is his real name, but we just call him H00ch. He is what I call. Kind of one of the core 300. Way back when I didn't know if anything was going to work, I started up the site and I said, you know what, let's just see if anybody even signs up for this newsletter. So the first 300 people, that bought the $99 subscription was actually lifetime membership. And not many of those 300 are left that I'm aware of. Maybe they're all off doing other things, but H00ch was one of them. So he has been around literally from the beginning. He's seen the site when it looked like a kindergartner put it together, and I don't know, maybe he still thinks a kindergartner put it together, but we won't go there. But he's been around a long time, not only trading, but the community. He's been on many podcasts that we've discussed, and then as part of Clay Trader University, once in a while, I'll interview traders as part of those live webinars, and you've been on what, 3 or 4 of those ones?
Yeah, I think it's been 5 webinars, but
okay, yeah. So
I'm not sure.
Moral of the story here is H00ch is a very well-known. He's been around, a good asset to the community. And I realize I'm beating a dead horse for all of you that are around the community, but you got to keep in mind there's always newer listeners. And because he's coming back, we don't really have an agenda. But H00ch, I guess, and try to do it as best as you can in a nutshell. Just summarize, what got you into the market, and kind of what brought you to the claytrader.com in the first place. You can always go back and listen to his original podcast, but just try to nutshell it for us.
Well, I started working at a bank, and through my coworkers, I got into the market just from them all being into it, and figured it was an easy way to make an extra bit of cash on the side. So, not knowing anything about it and just completely puppet trading off of them, I got lucky with the .com boom, and lots of fool's gold, which I've mentioned plenty of times before, which was probably the worst thing that could have happened to me. And then fast forward 13 years later, I got canned from that job. Maybe they thought I was day trading too much while I was supposed to be working. And while I was looking for another job, I wasn't having any luck doing that. I decided that I would, try to support myself by just day trading. And then since I was doing it more, I was probably losing more than I was while I was at work. So I figured I better, figure out how to actually do it properly. And that's when I started going on iHub and Yahoo message boards and
doing it properly translates to going to iHub. I love that.
Yeah.
That's great irony right there.
Seeing, I wanted to see what the pros were doing, so and then lo and behold, I saw your ad for your robotic trading course, and I don't know if I've mentioned this before on the podcast, but when I first saw the ad, I saw the picture of the robot on there and everything, and I thought it was some kind of automated trading system. So I figured, hey, I'll try this out. And at first I was kind of disappointed that it wasn't. There was just some guy talking about charts, but it ended up working out in the long run.
Yeah,
so.
I appreciate that feedback, because that's one thing where it's now looking back, I'm like, crap, I can see a lot of people being like your situation, wait, none of this is automated trading, or other people are like, no, I don't want to do automated trading, so they don't even give it a try. So not the best marketing decision on my part.
It is a common misconception that I do deal with in the support chat quite often. I'd like to purchase your automated robotic trading software. And I was like, oh, well, news for you. It's actually just Clay talking for about 16 and a half hours, but it's still good. You should check it out.
Yeah, maybe we should try to rename that course. I don't know. We'll cross that bridge later. But yeah, so I guess thank you for sticking with it and not just demanding a refund and coming at me with the full force of the Canadian government or something.
Yeah.
Well, I should know. Go for it, H00ch.
No, I don't know what that would entail, other than maybe a couple of canoes and some broken used helicopters that we've got from England or whatever.
Well, I picture a lot of hockey sticks, a lot of Monties. I'm trying to
horseback policemen. That's
not
what
tanks,
I think of.
not tanks, but bobsleds. I mean, which is 10 times more intimidating. So, but I guess because I don't really remember, and it's always fun to talk about fool's gold. So you went through the .com bubble. So you made a bunch of bank during that, right? Were you just nailing it out of the park?
Yeah, it was just stupid. I was like I said, I just started working at the bank, and I was making more money than I knew what to do with, and I was living in a $500 a month apartment and had zero expenses. So I was just dumping so much money into all these stocks because nothing better to do. So
And they were all skyrocketing, right?
yeah, it's like any company that had any mention of a website would just take off. It's like
Yeah, and I bring that up because I'm not going to name any names, but and correct me if I'm wrong, Hooch, but there's somebody out there that proclaimed, "Oh, I turned this small amount into like $1 million," when I got started. But that was all. I mean, that person's timing was the .com, like that's when they were getting started. So, I mean, is that really shocking, Hooch? Because I mean, I didn't live through it. I didn't trade it, nor did Trez. But I mean, when you stop and think about it, is it really that impressive? Because from my impression, every single stock was going up, whether you knew what you were doing or not.
yeah, exactly. It was just like how everyone's now saying they made, how much money they made during the last boom, the pot boom, like a few years ago. And they're talking about their percent gains, and then you look at the dates, and it was from 4 years ago. So
Oh, it's like everything went in a straight up line for 5-6 months at a time. Who would have thought you could make money doing that?
Yeah, but
exactly.
to give that person credit, at least they've taken that marketing, and boy oh boy have they twisted that into their favor. With all the marketing they do on that point. But I always remind people, well, you realize all those gains came when basically my dead grandma could have made those gains. I mean, because all you had to do was buy something. And
anybody with a 401k, managed funds, anything was just long everything. And even people who weren't kind of interested in the market were probably like, wow, my account's up 25%, 30%. Like this is great trading. And those advisors are probably like, we're the smartest people in the world.
Yeah. And, then it went kind of pop. Now, did the pop get you much, Hooch, or were you when the .com bubble, ended, when all the rainbows and butterflies and sweet little grandmas disappeared, how did your account, did you lose everything, or did you, how did you navigate that time?
I didn't lose everything, but I lost a lot. I mean, I was holding on to things way longer than I should have, and, I was trying to catch falling knives and the whole deal, but just from pure luck, I happened to make more than I lost, but I could have easily wiped everything out, because I had no clue what I was doing. I was basically just buying and selling based on what everyone else was doing that I was working with. So.
And I kind of want to hear both of your guys' opinion on this one, but obviously you first, Hooch. Is it safe to say, because, I mean, we deal with a lot of new traders a lot of times, and they think that trading is specifically about timing the market, and, you got to buy it at the exact right time, then it'll do everything you want. In my opinion, and this is based on, 3-4 years of trading myself now, determining if you're a good trader or a bad trader, there's two environments I think that you need to see. One is when the market is doing nothing and just chopping around, and if you can make money or not lose money during that period, I think that proves that you're a trader, because it doesn't mean you're always kind of in something. And the second one is like bear markets or downtrends, because anybody who kind of traded these booms where things are going straight up, half of them, if you ask them, oh yeah, so this looks like a good shorting opportunity, or what do you think about this chart? They don't even know that you can make money on the downside. So obviously they only think the market you can make money going one direction. What do you guys think? Because choppy markets and down markets, I feel like that's when all those people who have fool's gold still think they can just buy long because they see an opportunity, or their little indicator said go long anyways, even though it's been going up for 6 months straight. Those are like two environments I think that I had to see myself to see like, oh yeah, I'm losing money here. Like I need to figure out, risk management, things like that. And I know I always harp on that, but what do you guys think about that?
Yeah, because when I first started trading, I was trading in a cash account, so I couldn't even short. And I didn't know about or learn about options until Clay's course a few years ago. So I was only buying long. That's the only thing I could do, and I didn't even know that shorting existed. So, and same with everyone I worked with. Like we're all trading out of the same account type, so we didn't do any shorting at all. So,
and I think to Chez's point, in up markets, I always, it circles back to the whole real estate boom, and I still remember. I don't know. I'm a sucker for like reality TV, and I love like the flipping shows where they show people flip houses. And I don't think this one's even on anymore, but it was happening during, the boom. And I still remember this one episode where somebody, and the show was around the premise of, hey, this is these people's first flip. So this person buys a house, goes way, way over budget, like a ridiculous amount over budget, way, way, way past their timeline by a ridiculous amount. But because the market was so bullish during the pop, that they ended up making like double what they had projected. So when you stop and think about that, up markets tell people nothing. And that's what the socket market was like too. To H00ch's point when he said he was trying to buy, the falling knives. Well, yeah, when you're used to going long and any sort of pullback is buyable because, it'll just go up next week, then yeah, anybody can do that. Anybody can buy a falling stock when things are just eventually going to go back up. But to Chez's point, yeah, if things start to go sideways, or worse yet, if the market's kind of falling, that's where the true skill comes into play. And circling back to real estate, that's why so many people got crushed because they had no idea what they were doing. But there were still plenty of professional flippers, professional real estate companies that were able to make money during that whole time because they understood how the game worked. They actually knew what they were doing. So yeah, up markets, I'm just not impressed. I guess I don't know if that's irrational of me, but anybody can make money in an up market when things just go up and up and up.
And we're not trying to sell you short, haha, pun. But the thing is, like lower highs, lower lows. Whoa, the dip isn't going back to my break even. Whoa, we're going lower and lower, and that's when people just start holding the bag, and that's when people go underwater, and that's when accounts are blown up. So, yeah, people who can exhibit risk management, not only in up markets, but especially in my opinion, the market is flat a lot of the time. And we went through a pretty good consolidation there for a while before the election. And for context, it's now April of 2017 here. And people get chopped up, or people are trading too large, and they're trying to make moves out of nothing. And when you can recognize that, there's not many opportunities out there, and you got to be very selective, that's when I believe, people have really kind of turned their trading around. And H00ch, correct me if I'm wrong though, but I joined the community not at the inception by any means, but I think within the first year of it. And would you say your performance was still kind of a mixed bag? I don't want to say break even because I know you're making money, but you were kind of still taking some big losers, but you still have some big winners, and you probably didn't turn the corner until you really kind of, I don't know if it was the RVR course or you just from your experience at this point, started really kind of hammering on the fact that, you are like a testament to keeping your losers small and, maximizing your winners. So would you say your consistency was kind of mixed, especially kind of towards the beginning of the community?
Yeah, definitely. I was still taking big losses, but I was at least using stop losses, so that definitely helped. That was something I would never use before. I was just like, it didn't help that I was using a web broker that didn't even allow
I hated that thing.
Bracket
goodness.
orders or anything like that. You couldn't even enter in a sell and a stop at the same time. You had to pick and choose, So if I saw the chart going up, I'd have my sell order in, but then if it started turning around, I'd have to cancel that and put my stop order in, and it was pretty ridiculous.
Question: You were using stops, but you're still taking big losses, which I think brings up an interesting talking point. Was it because, why was that? How was that the case? Was it solely because of the broker you were using, or were you just still putting stops in, what you now would consider very illogical places? Talk to us about that, because maybe a listener, wait, he said he's using stops, but he's still taking big losses. How can that be possible?
Mainly because I wasn't taking enough off when I was seeing a profit. I would have sort of an idea of where I thought the price might go, but then I would never take anything off, and then it would end up going red, and then of course I'd usually be selling the bottom and things like that. But it was also because of the broker, like I say, not being able to have a target sell and a stop at the same time. I would have to juggle between having one of those orders live, and the way the stops worked, it was only good until the end of the day. So if it gapped down the next morning and I wasn't really watching it, then I could be caught with my pants down kind of thing, because I didn't have a stop in place. So
yeah, and I guess brings up the point, because I see it a lot, and I'm sure Chez has too. But I understand risk management. I use stop losses. Well, we'll give you credit. That's good that you're using stop losses, but as H00ch just said,
credit. You do get some credit.
Yeah, you have credit. There is more to risk management. There is more to trading than simply, I use a stop loss. And that's why I wanted to, push that question a little bit more with H00ch, because that's fascinating, the comment. Yeah, I was taking big losses, but I was using a stop loss, and a lot of people think that, well, as long as I am using a stop loss, that order that I see in my broker, then I got risk all figured out. There's more to trading than that, and Hooch hinted at things with some things that he said, but that's a very critical point, for listeners is just because if you don't use a stop loss at all, then yeah, you're just a reckless gambler. But even if you have a stop loss and you still feel like, I have a stop loss, but I feel like things are missing, trust your gut instincts. You're definitely missing. There is more to trading and, all the risk, analysis, risk management, trade management than just simply having a stop loss. I mean, is that a fair statement, Hooch?
Yeah, definitely.
And
because, I think the reason why too is because if you don't, so like we said, it's great that you have a stop loss because honestly, it's going to take you out of the trade no matter what. So obviously, unless you move it or cancel it, so you can't even be forced to hold the bag. But is your stop in a logical location? That's the part that a lot of people seem to kind of miss because I tend to see two different kind of ways to look at it. Especially, I just remember when I was a newer trader, the first one was, I'm using stops, but my stops were way too large. I'm going to give it a lot of wiggle room, and then you take that loss, it wipes out like 3 winners, and you're like, granted, I'm not losing any more money, but that loss is way too big. Then the flip side of the coin, and I always want to send a shout out to Alex because he's like our resident risk manager. Alex's stops were so tight, and I did the same thing back when I was like, my stops are too large. The stops were so tight and so small that, granted, I wasn't losing a lot of money, but I never really gave the stocks or the options or whatever any chance to move. Be like, I'm in. Oop, I lost $3. Guess I'll have to wait again. And oops, I lost $3. And a $200 stock moving 3 cents, 5 cents, 50 cents, whatever it is. That's really not too much, especially if you look at it in percent terms. But yeah, figuring out where to logically put it that makes sense for kind of long-term growth and keeping the odds in your favor, that's the difficult part that I think a lot of people have a hard time kind of figuring out because it definitely takes a little bit of finesse.
Yeah, and that's, where charts obviously comes in and why we use them as traders as a great tool because charts, anybody that says charts are used to predict the future, wrong. Charts are used to manage the unknown. I'll say that once more. Charts are used to manage the unknown, and part of managing the unknown is, to Chez's point, you got to be managing risk in a logical way because you can get too big, or like you said, you can get a bunch of little paper cuts that all add up. And, maybe not monetarily, it's going to, drive your account, to zero. But mentally, it's going to drive you insane, which might be even worse than your account going, because you're just going to get so frustrated at yourself, and it's just not going to be a pretty picture. So, yeah, it's amazing how one little statement that Hooch made turned into, a good little conversation here. So let's fast forward to, you learned options, Hooch, and I don't want to steal your thunder, but you're trading options, but you've also, since the last time we've talked to you, you've added another vehicle as part of your, trading tool belt. So, talk to us about that. What caught your interest in it? What you like about it? You know the routine.
Yeah, I started seeing Chez and MR Mike talking about futures and how you could trade them after hours, and they're highly leveraged and all the rest of it. And at first, I wasn't really interested because I knew to trade them you had to have a margin account, and I'd never had a margin account before. And since I'm in Canada, I can trade in my cash account and take advantage of some tax loopholes. So maybe I shouldn't be saying that on the air, but
if we hear a knock in the background, we'll know exactly.
Yeah.
That noise you hear is the bobsleds coming. Yeah.
So I just started. Well, I'll just paper trade it and kind of see what it's all about, and opened a paper trading account, and I was paper trading futures for maybe, I don't know, 2 or 3 months probably at least.
Oh, you did it that long? And I don't remember you doing it that long. Okay.
Yeah, it was. I remember I was using that the Apex futures demo platform, and I think probably half of the chat room was using it at that time. And
that was strictly, by no means are they the best broker in the world, but it was just because that was the platform I had, and I was like, oh yeah, they give you access to data and you can paper trade on it. So yeah, most of the chat room was just using that Apex platform for a while.
Are they still quality though, Chez?
Yeah, they're still.
Okay, so I know they're on a resources page, I think. So I mean,
yeah. So they're definitely by no means not a bad broker. So here's the reason why I recommend them, and I'll keep this short so we can kind of keep up with the story. But they're what's called an introducing broker. So what that means is that you pay just a little bit more for commissions. I don't know, it's like 50 cents more per turn or something like that. So what you're getting though is kind of 24/7 customer support. If you ever have any problems, there's always somebody you get in contact with. This is, in my opinion, especially being new to futures, I was like, I kind of need that support in case something goes wrong. Because like H00ch said, these things are extremely leveraged. Like you could blow up a $5,000 account in like a day if you don't know what you're doing, you can't get out of a trade, something like that. That's not to scare you people, because we still exhibit risk management. But that's why I want to do that. I didn't want to go with some deep discount, no support, platform might work half the time type brokerage when I was like, all my money is in this brokerage. I was like, I need to make sure I go with a good one. But yeah, anyways, carry on, H00ch.
Sorry, I was on mute there.
We noticed.
Yeah. So after trading these things on paper, I was kind of umming and ahhing because I'd have to open up a margin account and it's kind of making me nervous, knowing that even though I'd have my stops in place and all the rest of it, just knowing that the leverage is so high, and like Ches says, you can actually end up owing more than what you've actually got in your account. So I did eventually open up a margin account at Interactive Brokers, and I started trading just one contract at a time, and just to get my feet wet. And I'm actually still trading one sometimes two contracts at a time if I have a lot in my favor as far as the pros and cons. But yeah, it's I don't really do it during the day so much. It's mainly in the evenings, after everyone's gone to bed kind of thing. I'll get the itch to trade something, and I'll kind of have a look to see if anything's going on. And for oil, especially, every Wednesday we've got our 10:30 reports, so we've got some nice volatility happening there. And I'm a big fan of volatility and crazy moves, so I always, make sure I'm at my desk during that time.
And to give some context to our listeners here, is it safe to say, obviously, you had to learn some nuances about futures? Certain contracts are $10 a tick, certain are $12.50, some are $5.50. Besides those little nuances, though, would you say there is a big difference or any difference at all in the fact that you literally just are trading a chart? And I know, just to skip a little bit ahead, but you almost have like a risk versus reward order type, where when you click on the chart, it puts in a stop, it puts in your entry order, and then I think you leave the target open so that you can just trail your winners, right?
Yeah, what I'll generally do is try not to have any more than a $50 stop loss, which for oil would be 5 ticks or 5 cents, however you want to look at it. And then my target order will be dropped down onto the chart, and I'll generally move that to the next point of key resistance or support if I'm short. But since I'm only doing one contract, I'll generally have a target sitting out there just in case we get a spike up to it, and then I'll be trailing my stop up following either a 5-minute 8 MA or something like that, just basically putting it under the previous low sort of thing. But it's one thing about futures, compared, because I'm so used to trading options all the time. It's nice not having to worry about theta and having a trade go right, but still being wrong because the trade lasted too long, and losing money due to theta eating your gains. So it's nice to be able to just strictly trade the chart and not have to worry about all the other underlying things that options have going against you. So
this shows my ignorance towards futures, because I really know very little about them. So there is no theta, because there's contracts in futures, right?
Yeah, they're still called contracts, and they do have expiry dates. Like CL expires around the middle of every month, but most brokers, I think, if you're holding a contract, it'll just automatically roll over for you.
Oh, so there's no, they expire, but they don't expire like an options contract expires. So therefore, there's no theta. Is that essentially
Right.
What's going on?
Right. Yeah. And there is options for futures, but that's
Okay. And
something
I don't
different,
need my
so,
head
yeah.
exploding right now. Okay. And
So yeah, there are options for futures, which definitely do have a theta element to it, but it's very, very low. And, like Hooch said, most of the times brokers by default are going to, instead of holding it to expiration, they'll roll it for you. Because to be fair now, remember, options are worth 100 shares of stock for those of you who don't know. So if you hold something into expiration, you're in the money. I know I'm probably going above your head here. They'll just give you the stock because that was the point of the option. Now with futures, though, if Hooch, holds a contract into settlement, that might be worth like 50,000 gallons of oil. And actually, there are people who will get it delivered. They will have a truck of oil delivered, and most times brokers are like, "You don't have the cash for that. We don't want to deal with delivering this, so we'll just roll you or we'll close the position." But yeah, 100 shares is a lot easier to give somebody on their trading account than to deliver, bushels of wheat and pounds of coffee or something like that. These are actually physically deliverable objects. So most brokers are like, "We don't want to deal with this. If you really want it, we can do it." But most times we're going to default that you don't.
Yeah, we're actually talking about that in the chat room a couple of weeks ago. If you if they actually expired and you got your whatever it was you're trading delivered to you. If you're trading crude oil, you'd have like 4 or 5 tanker trucks showing up at your front door.
Yeah, I mean, now that you explain it, that makes perfect sense because this is options is paper. Options is literally contracts and shares But I mean, when you're trading futures, you're trading them on commodities, and a commodity is a tangible thing. So now that you say that, well, yeah, that would make sense. I would like all that bushels of corn, or wheat, or coffee, or orange juice, or all those other things that you can trade in the regards to futures. Now, all this is there's different logistics that we're talking about, but at the core. What percentage would you say that charts still plays in your futures trading? I mean, it's new. Some of these logistics are different that we've discussed, but as far as charts, what percentage of your strategy do they still play a role in?
I was going to say, 90, 95%, something like that, but I find there is a lot of catalysts that you have to be aware of. Like for example, that when you're trading oil, you have to be aware of that 10:30 report every Wednesday, or else the chart will go wacky all of a sudden. You'll have no clue what's going on. But so it's kind of like when you're trading in equity, you have to know when there's earnings and things like that. So it's kind of the same idea with futures. You have to know if you're trading say SPY minis, for example, you'd have to know if there's a FOMC meeting or something like that. So
okay, so we'll say how long does that take to figure out?
It's basically just go on your favorite investing website and look at the daily.
So we're talking maybe like 5 minutes in the worst case scenario, 5 minutes.
Yeah, basically what I'll do every morning is just go on this website and see what to expect for the day, like what kind of reports are coming out or meetings and things like that. So yeah, it's basically just a 2-minute exercise.
So correct me if I'm wrong. So what is this like? Is 75% charts and then 25%, knowing catalyst? Or I mean, give us a breakdown here.
Yeah, probably something like that. I would say and then then there's the pricing of each different futures contract. Like Ches was saying, there's different ticks and different values and things like that. But once you've figured it out, the initial time, it never changes. So once you're familiar with one contract, then that's it.
I'd probably say those are the only two things that you really need to know on top of chart knowledge. So because other than that, as long like Hooch said,
and your margin requirements.
And your margin requirements, right? Yeah. And it depends on what broker you go to, because they all kind of offer. Some have intraday margin, and others, are larger, just because people usually aren't day trading them. But like you said, for oil, essentially it's like a weekly earnings report. And most people are like, "What? Earnings happen every 3 months?" But this is the equivalent of earnings for a futures contract. It's just numbers come out, people react, and it happens every week. And like you said, if you don't have and there's easy ways to get it, literally a calendar that tells you all the times that they come out. And like Hooch said, he just knows that it's at Wednesday at 10:30 every week, because that's just a recurring thing that he trades. Once you know that, I mean, it's literally just trading a chart. You don't change your RVR by any means. You can pull up a little kind of graph that says, well, the ES is worth $12.50 a tick and CL is worth $10 a tick. And honestly, in my opinion, I guess this is just me, I wouldn't want to watch like 6 different future pairs because they all are different ticks, and like your size will be different for some of them. If one's like, some of them are like minis for $5 a tick, and those are great and all for kind of starting out. But aside from those things, it's really just trading a chart, because honestly, charts are just a gauge of people and emotion and supply and demand, and there is no difference. It's just a matter of kind of how you're doing it. So, we have people who trade futures, people who trade Forex. As long as you keep an eye on the calendar like you should with stocks anyways, it's pretty much trading a chart, in my opinion.
Yeah, no, and I remember when I pulled kind of, because context here, Clay, can we look at some Forex stuff in the live webinars? Clay, can we look at a Forex chart? Clay, can we look at some future stuff in one of the live webinars? I'm like, okay, I need to prove a point. So I think episode 100, actually, I pulled up a chart. But I left off the values of it in terms of, what was on the x-axis and the y-axis of the chart. So it was just a chart with a pattern and stuff. And I said, all right, everybody, let's break this down. And we all broke it down. We determined, we set up a trade plan around it. I think that, it was a short setup. So everybody said, oh, yeah, if I saw that, that's definitely a short. And, that because of that, and that's bearish. And, oh, that's kind of bullish. But at the end of the day, we analyzed the chart together as a group. And we put together a trade plan with it. And then at the end, I was like, and you know what this chart was? This is actually of a currency pair. So right there, you guys all just analyzed a Forex chart. Now you could trade Forex just like that. Now, like we've been discussing, sure, there's little nooks and crannies that you need to understand about the Forex market before you can trade it. But at the core, once you know a chart, you have the ultimate flexibility, because at the end of the day, no matter what you're trading, the key question still pertains, and that question is, what direction do I think is going to head? That could be the contract price. That could be, the currency pair price. That could just be the stock price. But at the end of the day, what direction do I think whatever I'm looking at is going to move? And that's what a chart is used for. And that's the question you got to be able to answer. And that's what charts are powerful with. So yeah, H00ch had to learn, what a tick's worth and, margin requirements and some other things. But that's just, stuff on the surface deep. And, that's why I guess charts are pretty cool. But so you still do options though, right, H00ch?
Yeah, mainly I day trade options.
Walk us through your day, because you are a full-time trader. So, and then you also mentioned, in evenings you can trade contracts. So, are you like sitting at your computer 24/7, or walk us through kind of what a normal routine, a normal, daily approach would be for you?
Well, my son will come crashing into the room and wake me up at
good alarm clock.
Usually about 8:00. And then I spend most of my morning getting him ready and taking him to daycare, and then I sit down usually by shortly after 9:00, quarter after 9 kind of thing, and set up my charts and kind of get an idea of what's going on. And I've got my same 8 tickers I look at as far as options trading, like my Amazon and Tesla and Netflix, Facebook, Apple, and SPY. And I'll just basically look at those charts, look to see which ones, or if not all of them, are gapping up or down, because normally those ones gap up or down every day. And then just sort of draw a few lines and get ready to trade. So.
Now, is there any like the night before, are you doing any sort of homework there? Are you, scans, running for setups, or are you just literally waking up, taking Josh to daycare, getting him ready, and then you just analyze the market?
Yeah, I'll do some charting in the evening. I'll sort of, look at the longer term charts in the evening to see if I'm missing any trend lines. So anyone that's seen my charts know that I've got lots of trend lines on them, so I'm not usually missing any. But yeah, it's really for day trading. It's you can make all the plans you want the night before, but then if you get a like a 2% gap down, and that basically throws everything out the window. So I learned to really not worry about setting up trades ahead of time on my day trading. But what I will do is I'll in the evenings I'll look for swing trade ideas and sort of have a look at my swing trades and adjust stops and stuff like that. So
So you are swing trading them. Now, are those your accounts or are those your parents' accounts? Because I know you manage. You have like 18 different accounts. I can't keep them all straight.
Well, yeah, I have my own, and then I have accounts for my family as well. They're just equity swing trades, only long positions, just very small share amounts. Usually, 100, 200 shares at the most, kind of thing.
Now, do you have any openings at the H00ch advisory trading firm for retirement capital? Because correct me if I'm wrong, didn't you have like 50% returns on your parents' accounts? And granted, I'm not saying that these are $1 million accounts or anything, but didn't you have some great returns on them last year?
Yeah, well, since inception, I guess they've gone up about 40%. So my mom's account I've had for about 3 years, and Dad didn't have quite as much faith in me, so he wanted to see me prove myself with my mom first. So I've only been trading his account for about 1.5 years, maybe 1.75 years now, I guess. Well, they're both up around 40% so.
He was doing his due diligence to see if you dumped it all into penny pot stock. So good on him. Yeah. Your mom always has faith in you because she knows she feeds you well and that you'll make good decisions. But obviously, if you're thinking to yourself, well, 40% over 3 years, that's pretty measly. You've been brainwashed because
absolutely.
there are advisors, firms, funds that would absolutely murder an entire family for 40% return. So that's absolutely amazing. And the cool thing I like to kind of contrast for this is that H00ch, I'd venture to say you make most of your money day trading. That's just kind of essentially how you pay yourself and how you pay bills and things like that. But the cool thing is that all of the things that you know from day trading and using charts, you can apply on a swing time frame. And that's honestly what I do for my swing trading of options. The cool thing is that it doesn't really matter the time frame. And Clay, you do great in the sense of a lot of times you'll block out not only the ticker but the time frame, because honestly, charts are the same. There's always somebody looking at a daily chart or a 30-minute chart. There's always certain sets of people that are looking at these different time frames. And that's why it works, because there's human emotion in all of those. And I think it's really cool that you can go from literally trading in and out in minutes to swing trading your parents' accounts or any of the accounts that you have on a daily time frame, and you still literally manage the trades just like you would any other trade.
Yeah, and with the swing trading, since I trade with the much smaller amounts, I am a lot more lenient with my stops and things like that, compared to what I would be in my day trading. So it is a little bit different as far as how much room I'm giving them. Yeah, but it's like you said, it's just a matter of what chart you're looking at. They're all the same. You're looking for the same patterns, the same setups, whatever. So when I'm day trading, I'll look at charts anywhere from 2 minutes to the daily, and then when I'm swing trading, the lowest I look at is 15 minutes, and the highest is a month. So I'm basically just shifting I look at 6 charts in either case. I'm basically just shifting the time frames over.
So the key thing here is just the charts don't change, but like H00ch said, how he manages them does change, because he's going to, be a little bit different with a day trade versus swing trade. But, well, how is he going to be different? Well, the thing that's helping him make those decisions is the chart itself. So the chart is kind of the linchpin to everything. So, there's one thing to be able to read a chart. And Ches and I, we have covered this many times before. We still see it. Oh, yeah, I can read a chart. Well, that's don't get me wrong. You need to know how to read a chart, but can you apply a chart? Can you follow a chart? Can you actually manage a trade using a chart? Not anybody, but supports, resistances. You make a little bit of effort. Anybody can learn how to identify those, but there's a whole lot more to trading than that. And the managing it is the crucial part. But how do you manage it? How do you know to management? That's where the chart still is, kind of that bridge between all strategies. And, H00ch has it down, very well. Now, do you have any do you look for the same patterns? So maybe so the H00ch pattern that we know, well, that's a shorting pattern. So never mind. That doesn't really pertain. But do you like the same patterns that you use on day trading and swing trading, or do you have different sets of patterns that you like to look for each type of strategy?
I think probably with my swing trading, I tend to play breakouts a bit more. because like I say, I give them a lot more room as far as stops go. So generally with a breakout, you want to have your stop below the, if it's like an ascending trend line, ideally you want to have your stop below the ascending line. So if you're day trading that kind of a setup, then usually your stop is going to be too big to warrant the what you could possibly gain out of it. But yeah, there's other setups that I trade with both. Like I like pullbacks and things like that. Like if you're in a bullish trend and you get like a fast pullback to like a 50 moving average or like a previous breakout level, then I'll
Speaking
take
of
those
pullbacks,
trades
you
all
see
day.
the SPY right now?
Yeah, I was just asking what
Yeah.
report just came out.
I'm gonna alert that in the
wasn't
room
sure.
real quick.
Yeah, I'm just gonna sell.
Yeah, I was gonna say.
I'm just gonna sell a put here.
Yeah, I was gonna say, was that influencing your answer when? Because boy, oh boy, that was bizarre timing. You talking about pulling back, and I look over at the SPY, and whoo.
Well, I was in puts already from that third touch of the daily high there. So.
Are you in them right now?
Yeah, I just sold half of them.
Half of them. How many did you have?
I had
40.
No, not anymore. No, I had 6 from 35 cents, and I just sold 3 of them at 47 cents.
Nice. And then
So
where's your stop at? Probably up above those highs.
yeah.
And very nice. And you still got 3 left to make it work for you?
Yeah, I just sold another one because it's coming back up now. But
Yeah, I was going to say that hammer at the 50. It's 2:00, so was there a report out today or something?
yeah, it
Or
was
is that-
FOMC today.
Oh, was it? Okay.
The minutes or whatever. So
See, there's again the power of charts. Shame on me. I didn't know what their meeting was, but just looking at a chart, it told me that there must have been some sort of meeting because the chart all of a sudden got active. So, it really charts allows people to be lazy. Now, granted, if you were trading, you'd want to know about that, but I'm not trading SPY options today at 2:00 in the afternoon, so I don't really had any need, but kind of neat how that all works out. So. Well done. Oh, it's going back down for you, Hooch. There you go.
yeah.
Now I'm going to be watching that. So we want this to die, right? Die, SPY, die. Got
Yeah.
it. Got it.
Put out one of your video charts.
Yeah, exactly. Oh, that thing will go down to 235 real quick. Now, Ches,
Literally
do you have
crush
any,
the market, yeah.
Do you have any positions on with the SPY right now, Ches? Are we
I have
by rooting it
both
to die? Are you losing money, or what's the status for you?
That's the beautiful thing about advanced options is that I literally have room down to 231 for the SPY to still make money.
231.
231,
Holy
and
smokes.
I'm still making money
For
right now.
context, right now it's at 237. So just
Yeah.
for listener context.
So the market would need to go down like 70 handles for me to even feel any kind of, and that would just be break even. I wouldn't even be losing money at that point. So no, I'm totally fine. I have positions on in SPY and IWM, and guess what? Both are profitable. So I'm doing absolutely fine today with this. That's the beauty of advanced options. I know we're talking with Hooch today, but I get huge amounts of buffer space. None of my stuff is very, very tight in the sense of most of my trades aren't 50-50s. And like I said, RVR trades are much different than advanced options trading because I set up my essentially probabilities of profits when I put the trade on. But I'm still using charts. Clay, I think you remember in the chart the other day, I posted a chart with a resistance line, and I didn't post the ticker or whatever symbol it was, and it was just BABA on the daily, and that's how I set up my advanced options trade. I saw resistance, I said I don't think it's going to go much above it, and lo and behold, it bounced off that line. So yeah, charts are pretty cool, but you can apply for pretty much any kind of product, which is great. And before I forget now, because I'm already on this tangent, I want to bring up the sense, you were talking about how charts can be used pretty much for anything. We have students that trade, the Shanghai exchange. We have people in Australia that trade the Australian exchange. We have people who trade, I think it's TSX in Canada. And the cool thing about it is that, like I always say, charts are just pretty much a gauge of people's emotions and supply and demand. So, emotions don't change whether you're across the world or somewhere else. Fear and greed is a real thing that all humans experience. So, no matter where you're at, no matter what market you're trading, technical analysis can work. And obviously, you need to know how to use risk management. But yeah, it's pretty cool because charts literally are just a gauge of people. And I find it fascinating. That's why I love this so much.
I mean, I work hard, but I'm also lazy, and I really don't feel like going and learning about the Australian economy or the Chinese economy in order to, develop some sort of fundamental idea. Now, if that stuff floats your boat and you like to dig in deep and learn about all these different economies, that's fine. But to Chez's point, who cares? Just use the chart and you can trade any economy's stock market because you're just using the chart. But so charts are a good tool to have. I think hopefully we've done a good job of illustrating that. So, I mean, H00ch, you're trading options, you're trading futures, looking up at the time. We'll start to wrap things up. But do you have any sort of goals or ambitions about where you kind of want to head? Do you want to start to tackle something new, advanced options, for example? Or, I mean, where do you stand right now in terms of where you see yourself going forward?
I have sort of tried advanced options, never live. I've paper traded them a little bit, but I haven't even taken half of that course, so I don't really know anything about the spreads or how to manage them and things like that. So,
and you'd have to use a margin account too.
Yeah, and I'd have to use my margin account for that. But now I have one for futures. So, but I don't know. I don't really have any plans as far as expanding what I'm doing now. Although I do have an oil futures option swing going. But that's sort of just a mix of what I'm doing, anyways. So it's not really anything new. There's different nuances with those as well, because a futures option contract isn't priced the same as an equities options contract. It's like normally an equities option contract, if it was priced at 18 cents, it would be worth $18, whereas an 18-cent oil futures option would be $180. Yeah, so yeah.
Right. Now, there is a question I did want to ask you, though, because I think this kind of pertains into kind of goals and ambitions and things. Correct me if I'm wrong, but slowly over the past, I don't know, at least 2 years, I want to say especially in the last 12 months, it seems to me like you have been slowly kind of upping your size. And when I say slowly, I'm not talking about like doubling your size by any means, but am I wrong in thinking that, or are you just getting a little bit more comfortable and you just up your size a little bit more and a little bit more? Granted, I don't think you take larger amounts of risk per se, but you had 6 contracts on. I mean, you used to trade like 4 contracts. Is that right, or am I wrong?
I guess my day trading size has increased a little bit. My swing trading size is still the same, and like I said before, my futures, I'm still on just one contract normally, but options I kind of go back and forth. I think it depends a lot on what the market's doing. Like if the market's trending, I'll be a lot more comfortable putting on more, but then if it's stuck in a tight channel or we get a lot of sideways action, then the larger your long options position, the more you're going to lose from theta. So,
and the more I'm going to make.
Yeah, exactly, and the better off you're going to be. So, yeah.
The circle of life.
I would say at the moment I'm probably I had a little bit of a smaller size again. Not too long ago I was trading a bit bigger size because we were in quite an uptrend.
Going in a straight up line after November.
Yeah, I think back in February of this year, when just looking at the SPY chart, you can see how it was just basically gapping up and going every day. I think around that time I was trading Netflix and all the FANG stocks and using bigger size back then. I was having, it wasn't uncommon to have like $1,000 a day and things like that, but I've kind of slowed down on that as well, because once it starts getting in a tight range and you're trading that big size, like I say, it can do more harm than good with the options. So.
Yeah, and it's fascinating. I don't know. I'm trying to think. MR maybe talked a little bit about futures, but this is first time futures talk. So for those of you, if you think this stuff's way over your head, start small, learn stocks, and then options, and then there's little things to learn, but as we've been pounding home, it all revolves around the chart. So we'll end it with this, and unless this kind of spurs even more conversation. But what would you tell somebody, because you do trade full time, And if somebody were to say, hey, Hooch, I want to trade full time and I want to go full time, do you have anything, what sort of advice would you give me? I mean, what would you tell somebody that wants to go full time trading?
I would say don't quit your job just yet. And
wait till you get fired.
Yeah. Definitely get fired, and that way you get some good benefits out of it. So, but yeah, definitely don't just think that you can quit your job and be a trader. You definitely need to get educated first and practice, and you want to make sure that you've got a lot of your debts paid off and have a good cash cushion. I would say at least a year, probably more than that, but every situation
and
is
when you
different,
say cash cushion, you mean expenses saved up, a year's worth of expenses, right?
Yeah, exactly. Yeah, you don't want to be having to move or remortgaging your home because your trading's not going good. So,
and I mean, I think Sean's podcast was a great. She kind of dives more in depth onto why that is, and it's mainly because, Hooch, I want to see if you agree with this. The less you have on your mind, and when I say overhead, I don't just mean overhead like your, like cash flow overhead, like I have rent, I have electric bills, cell phone bills, but the less you have on your mind in terms of, I don't know how I'm going to pay this, or I have a car payment due, or all of those things will take themselves out in your trading, especially when you're new. You will start to act emotionally, you will force trades. So if you have that year of expenses saved up, and essentially, by no means am I saying you can go out to the theater every week and whatever, if you got all the money for that, then sure, go for it. But if you're able to literally not change your lifestyle or your family's lifestyle, and you have that saved up, and you can just sit at the desk, your iPad, whatever you use to trade on, and just make logical decisions and not say, I need to make $60 today, or if I don't make this, the lights are going to go off. Those things will take themselves out in your trading. So if you can reduce those in advance and practice and prove to yourself that you know what you're doing, you have a positive expectancy, you know how to make money, you know how to not lose a ton of money, then I'd say you're well on your way to going full time. But I always touch on this. I only had about 3 months of savings kind of saved up, but I hated my job so much I went for it anyways. And honestly, that weighed on my mind so much that after a month of trading full time, I actually went to get a part-time job to kind of ease my mind. So I'd say at least a year, like you said. But yeah, the less on your mind, the better your trading will be, in my opinion.
Oh, for sure. Yeah, it's such a mental game that the last thing you need is to worry about, how am I going to pay fill in the blank? I need to pay for fill in the blank, so let's go make a trade right now. And before you know it, you're underwater on a trade. Why did I ever make that trade? It made no sense. Well, I'll tell you why you made the trade, because you had all these voices in your head saying you got to make a trade because you got to pay for fill in the blank. So it's just not a good situation. So looking up at, I asked the chat room if anybody had any questions. So this is a good one because we always like to try to end with some sort of fun questions, but we've already asked all those to you. But Speedster from the chat room asks, what do you love most about Canada?
Our tax-free savings account.
I knew that was coming because I want to move to Canada too for that one.
There you go. Favorite part about to have tax now,
and our neighbors.
And yeah, there you go. Very well played. Good save. So it's is it just your tax, or is it your trading account taxes that are so friendly, or is it just the overall taxes that are so friendly?
No, it's basically just the this investment account that we've had for the past 9 years, I think it's been now. It's basically, I think it's like your Roth IRA, except that we can withdraw from it whenever we want, tax free.
Oh, gotcha. Yeah, that is kind of a.
I think with yours you can put in $5,000 a year or something like that, but you can only withdraw tax free after your retirement age or something. But we can put in $5,000 a year, but we can make like whatever amount in it and take the entire amount out tax free.
Oh, nice.
So it's
So essentially, he can day trade on that account and actually pay himself instead of waiting until he's 65 or whatever.
Right.
It's very, very friendly in terms of that. Don't get me wrong, though. Most people trading actually don't even know that they have a difference between a margin and a cash account. So I venture to say you're one of the few that really kind of take advantage of that. But
not for long, because we know the Canadian authorities are probably listening to this, and they're going to shut down that loophole real quick here, I bet. So.
Well, yeah, there has been a few court cases where there has been day traders that have made $1 million in their tax-free savings account, and as of this year, I think the maximum contribution is $55,000. So he's basically, turned $50,000 into $1 million or so, and they're they're being taken to court and being made to pay tax on these accounts, even though they're supposed to be tax-free and stuff like that. So yeah, so it's I think the main reason they're not too worried about it is because most people are going to be losing money in these accounts than making. So
yeah,
it probably makes it so. Those capital losses that would have to be coming out of these accounts is more than making up for the possible gains that people might have. So
yeah, I think statistics would back your claim that most people that are trying to do this stuff, are losing money when they're, like you said, when you first got started. I wanted to find some professionals, so I headed to the message boards.
Yeah.
Woo! So, but
I think when H00ch turns his $55,000 account into $1 million, he'll probably just be packing the family up and moving to the Caymans anyway, so he won't have to worry about that then.
Yeah, Bahamas.
Somewhere tax-free.
Yeah, exactly. Well, H00ch, do you have any final thoughts you want to get out or anything? I mean, I'm sure you'll be back at some point. So, I mean, it's not like we need to get all mushy-gushy and, oh, thanks so much, because you'll be back. But, I mean, any final statements, any final whatever?
Departing words?
Yeah, departing words.
No, not really.
Just God bless Canada.
Yeah. I've had my dog here staring at me, wagging his tail for the last half an hour because he wants his TREAT, so...
Oh, wow, you can't even say that, so I won't say it either. So.
I got to spell stuff out, too, for our dog, so totally understand there.
Well, H00ch, thank you very much for hanging out and coming back. And
of course.
A public thank you from behind-the-scenes perspective. There's just been some bad timing of things. There's been some logistical, technical issues, and H00ch is definitely helping us out by coming on and doing this so that we can keep bringing you these podcasts, every single Monday. So a public thank you for that. I appreciate you being a team player and not demanding a T-shirt like some other people out there may have or may do. But so thank you very much for that, and it was great catching up with you.
Thanks. It's good to be here again. Hopefully, I'll be around for another one.
Yeah, if you've made it this long, you'll continue to be around as long as you don't go. O'Day or Russ on us or something like that.
Yeah.
So, or I guess we got a new stooge or Sax on us. So, but all right. Well. Thank you all to you listeners out there. Final few things before we part ways. If you're listening on iTunes or any of the other podcast players, definitely subscribe. And especially on iTunes, if you could leave us a rating, hopefully a good one, that really helps us out. And it's just a very easy way to let us know that, hey, you guys are helping. You're not wasting your time. Please keep making these. If you're listening on YouTube, definitely subscribe to the channel and check out the channel. Lots of other videos on it. And then finally, if you're listening on the site, click that share button, leave us a comment down below. We do read those and we will reply. So as always, we thank you to all you listeners out there. Thank you again to H00ch. And of course, thank you to our esteemed co-host, Ches. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.